Hi guys, Jon Cramer with the Boom Real Estate Group, brokered by American Way. Today we're going to sit down and talk to Minnesota River Valley, and we're going to learn what title insurance is. Hi guys, Jon Cramer with Boom Real Estate Group. I'm here with Tom and Tricia from Minnesota Valley, title and abstracting. Today we're going to talk a little bit about what a title company does, why it's important to close at a title company, and just kind of what Minnesota River Valley Title is all about. So Tom, we're going to start with you. When did Minnesota River Valley start?
So we were incorporated in 2004.
Okay.
So yeah, about 22 years from now, we've kind of been in the Mapleton, Mankato area. We've been in, Mapleton kind of started, we ended up coming here to Mankato. I think that was around 2012. 2016, we moved to Finianville, and been here in 2024. We got our own place up at St. Andrew's Court. It's kind of by Boulder Tap House, which we are today.
Yes.
So it's just kind of a quick snapshot of when we were incorporated and kind of the timeline where we've been and where we're at now.
Awesome. So, and we have Tricia here today. Tricia, tell us what you do and what your role is with the company.
Well, I'm not with Minnesota River Valley. I'm with First American Title. So I'm the underwriter that they choose to write with. When they close their transaction, there's many underwriters to choose from, whether it's Old Republic, Stewart, Westport, Fidelity, Chicago, First American. They all have a choice, and we do all their underwriting. So
Awesome.
we do all the checks and balances on the back end, make sure that they're writing a good policy and clear title and all the
Love
things.
it.
Yeah.
So one of the big things that I get asked all the time from my clients is we talk about title insurance, and then there's always this fee, and they're like, what is title insurance? So Tricia, do you want to just talk about what title insurance is?
It is it's your life investment, insurance on your life investment. Probably the biggest investment you're going to make ever is buying a home. And so, the one-time charge is a one-time charge to protect the ownership of your property, that you have a right to own the property, and protects you against any unforeseen fraud that can happen post-closing, or maybe your neighbor builds a shed in the backyard and it encroaches on your property, things like that are covered for the fact that we have a duty to defend on that policy when things come up that affect your rights or interest in your property.
So when we see that one-time charge, how much protection does that allow a buyer to have, or what's the coverage?
The coverage on an owner's policy would be the coverage of the sales price, and obviously the value goes up all the time, right? So
Sure.
if there was something that were to come in play that would cause you to file a claim, we would bear the expense of defending you in that claim to correct the defect.
Okay, so
Okay.
covering litigation and
all the
those
things.
attorney
Yeah,
fees.
if it's the right policy, there's different policies that you can purchase. We have the homeowners policy is the policy that they issue, which gives the most protection for the consumer. So, which includes post policy things that happen, which we've never had before. Before it was like anything that happened before that we don't catch was covered.
Okay.
But now there's post policy for things like deed fraud. If I could go down to the county and just have my friend Tom here notarize a document and forge your signature and take it down to the county, no one would be the wiser, and next thing you know, I'm entitled to your property.
Right.
Yep. So then they protect it. They would defend on that.
Okay, and I think that's one thing that is getting more and more prevalent is fraud in real estate transactions right now. I know I've gotten several phone calls about people saying, hey, I have 80 acres in Winona to sell. Would you like to list my property?
Mm-hmm.
And as an agent, the first thing we say is, well, absolutely, I'd love to.
Of course.
Yeah.
Yeah.
But what do we have in place now, or is there things in place now to kind of help protect?
Well, First American has one of the things I pride myself on being part of this company is that they have so much technology tools for our agents to help protect against that, whether it be safe validation, when they're going to do a wire, they can run the numbers run the information to make sure that it's an actual bank and then it's an actual account. We have a new platform called Order Insights, where now when a file gets opened up, first thing they can do is they do an SDN check first to make sure that they're able to sell, that they're not on the watch list.
Sure.
And then they have a whole section where he can send a text to your buyer
Okay.
and they will do a selfie and do their ID, and it doesn't go back to by text, it goes into a system, and they run a check to make sure, is it a new email address? Is there a new bank account that's been recently opened?
Sure.
Or is this driver's license brand new?
Yep.
And they do all the checks to deliver red flags to say, hey, you might want to look at this.
Sure.
So, yeah,
So has anything like that recently came up for you guys or Tom?
not for them, but it's coming up a lot. And
Yeah.
so, for one thing I would, First American Title has a great LinkedIn page that has a lot of people in our company that come together that talk about, and I think we've stopped over $1.7 billion in possible fraud just in the year so far
Holy cow.
with using the platforms. It's
That's
insane.
A huge amount.
Yeah, and so Sarah Frano, who is our fraud expert at First American, you can find her on LinkedIn. She has a lot of great podcasts and a lot of great information that's constant
Sure.
about what's happening.
Okay.
And I mean, let's be honest, fraud has been around forever. I mean, there's history, there's stories about Abraham Lincoln and his deeds getting taken of property that he owned. I mean, it's always been out there. That's the
Sure.
common denominator. It's just that everyone's getting more sophisticated.
Right. Technology's changing.
I mean, I could just make a fake ID. You can go down to, I make a fake birth certificate and go down and get a driver's license at the DMV.
Right. Yeah.
I mean, it's just so, it's the same story over and over, but it's just so sophisticated.
Right.
Yeah.
Okay, Tom, we're going to switch to Minnesota River Valley. So what is your role? What do you do? Talk to me about Tom's day-to-day.
My day-to-day, so yeah, I mean, we're a smaller firm.
Okay.
So my day-to-day, I get to wear a couple hats.
A couple hats.
A few
Yeah,
hats.
a few hats. We'll say in HR, I'm terrible at that. So employees are happy, they're doing well.
Yep.
Yeah, generally speaking, I with the title of CEO, and I do look at the day-to-day operations, but I am also involved in the transactions. I can take care of the exams, do some of the escrow work and whatnot. But yeah, my day-to-day is kind of pretty broad, and it's very interesting, very fortunate that we're lucky to be for the volume and the amount of work that we get to do. But yeah, our staff, managing them, what is great is, a lot of the things that we do here at our company, we do them in-house, where our exams are done. We have abstractors, we have an individual who's capable of drawing out the full maps and meets and bounds. As far as that goes with any type of tax liens or searches, our staff, everybody is competent to be able to perform most of those tasks. But everybody does everybody kind of has their silo to where they're specialized in. But yeah, but we do also cross train, because to understand a part, the whole,
Right.
you gotta know your part and everybody else's part. So we're big on that. I think another thing that's neat too is, how we do business and kind of with our clients, and if we were kind of in-house. What this is First American, of course, because nice thing is we have a real estate attorney, Liam. If you watch this, he's wonderful.
Yeah,
Shout out to him.
Yeah, we got a line, hey,
Yeah.
former friend, like, hey, this seems kind of odd, and it's always good too just to have that asset at our club.
Yeah.
I'm like, this doesn't seem
Like
right.
as an underwriter, we give
Yeah.
them limits to where they can approve certain transactions
Sure,
up to
yeah.
$2 million. But if they're doing a huge, commercial deal, or even a house that's over $5 million and they need some kind of, approval to get something done, they'll have to reach out to us as their underwriter to guide them and get
Sure.
approvals to make sure that
And
they're.
even if it's like some odd, like, hey, we had certain bankruptcy with the client, it's chapter 13, the judge said this, that, whatever, what can we do with this property? We think it's this, but we just want to
Can
make
we
sure.
close now
Can
and
we
follow
close
up with
now?
something later
Okay.
as they moving?
Gotcha.
Yeah. So combined with that, and I think right now I'm working on file for our firm or our company, I think it was 10,450.
That's crazy.
So we take the individuals that work here in our company, the amount of the experience, and going through the files, working through them, and everybody kind of knowing what happens, what needs to happen, what right looks like, what wrong looks like, what can we do, what we can't do. Then coupled with their competency and the support they give us, I get to oversee that.
Yeah.
It's kind of our sauce. It's kind of what makes us unique.
It's kind of, yeah.
Yeah.
I mean, our job is, First American, our job is to help our agents get something over the finish line. We can't always do that right away. We might be like, well, if you do maybe this and this, we can get it to close. But
Sure.
you got to do this and this first. All the while minimizing risk.
Yeah.
What we do is risky every day. Every file has a risk attached to it. We just
Sure.
got to decide if the risk is worth moving forward
Right.
and minimizing it as much as possible.
Sure.
So Yeah, that's kind of, there's some files that are super easy, you know, one owner, there's only been one owner and it's an easy transfer. Or there's sometimes when you have owners that have lived there for 40 years and the seller's been married 3 times, but he only tells us about the one wife.
Sure.
So you know, there's all kinds of, the amount of work that goes into these files that I don't think consumers understand is very, very intense.
Right.
And so when you talk about the one-time charge for, you know, you got the closing aspect, but then the title policy that's issued, there's a lot of work that goes in behind that.
Right.
And it's not, they're not all just one and done easy deals.
And,
So.
well, and the consumer hardly ever sees any of that work that you guys do. You know, if we
They
get
don't.
to the closing table and we're clear to close,
Mhm.
we're signing documents, they don't understand the amount of hours that you guys have put into,
Well, yeah.
into that file just to get us to that table.
And you're a realtor, and so one of the things that I can say, that I would love to say, is that, you know, I have a lot of agents, title agents, because real estate agents, but title agents that don't even, you know, send the commitment. The buyer never sees the title commitment. And we have to remember that they need to see it, and whether they understand it or not. And as a realtor, the thing that's really important is the things that fall under Schedule B2, the exceptions, everything that runs with the land.
Yep.
You know, there could be, and we don't talk about that enough. And I think consumers need to understand what runs with the land, because there could be a driveway agreement on there. And nobody knows that it exists, but the file closes, and this happened to me, this is why I'm telling you this story. The file closes, and a year later, the buyer's really upset because the roadway agreement or the driveway agreement said that he had to maintain it, and it's a 3-mile driveway.
Right.
Shared with the farmer.
Yep.
He would never have bought that property had he known that that existed.
Yeah.
So what potential new buyers need to see the title commitment to understand the items that will stay on their policy,
Yep.
whether it be an encroachment that has been insured over many times
Yep.
by prior owners or a driveway. So that's, from an underwriter perspective, those are the things that are worth the money.
100%.
Not just being paid, you know,
Absolutely.
too. So yeah.
And it's important too, you know, we're our staff, we're in the community, we're part of the community. You can find us in the grocery store.
Yeah.
Yeah.
Right. Absolutely.
Yeah,
Yeah.
it's, and generally speaking, like Tricia was saying, all the protections, but at the end of the day, our job is to make sure that the new owners have a clean title. They know the lay of the land. They know, and I think too, even if we have those things come up like an encroachment or a driveway agreement,
That they're covered.
yeah,
taken care
it's a very personal, intimate relation. Because like I said, you can see me down the road, you can see me on the grocery store, and we do generally care about at the end of the day. It's a privilege for us to be able to do that service, and we love it. I mean, the closing day is great. People come in, but that is a big moment in people's life, and that is a privilege for us to be part of that. And we take that serious.
Yep.
So
It's a big event. I
it
mean, think
is.
about all the big life events that you have in your life. Getting married, having a child, graduating, college, that big promotion. Buying a house is pretty
It's huge.
up there,
Yeah.
you know? And so that's and it's not viewed that way really. Like it's, for a lot of people. So it's, I mean, in general, it's like, because they have all these people helping them make, but at the end of the day, it's a huge investment and it has to be protected.
Well, and for most people, it's the biggest investment they make in their life.
Exactly.
You know,
It is.
and it might happen, you know, one time in 30 years, or it might happen every 5 years.
Yeah.
But every single time, it's a huge investment.
Mhm.
They're saying, hey, this is the property I'm going to purchase. This is what I'm going to invest my future in. And you guys are here to protect it.
Mm-hmm.
Yes.
And I mean, I've had lots of calls from customers in my life that have, well, we think we have a problem. We need to file a claim. I'm like, well, you didn't buy title insurance.
Right.
So even though the county or the city failed to tell me about that $20,000 assessment that was coming, you didn't buy title insurance. If they had told, if you had, we would go and take care of that for you, but we can't now. So you're gonna have to pay that $20,000.
Right.
So all the hands in the cookie jar, you got the county, you got the city, you got the recorder's office, you got the lender, you got the title agent, you got the underwriter. People are human,
Yep.
people make mistakes,
Yep.
and things get missed.
Yep.
From the city or from the county, it could be whatever. We as agents only know what we know.
Right.
We only know what we're told.
Yep.
And disclosed. So if you don't have title insurance and that first wife from the house that this guy sold comes back and says, well, where's my money from that sale of that house? He got to live there all this time, but he was told when he sold it, I'm supposed to get 15% or whatever.
Right.
But he never told us that it's his first wife out of 3.
Yeah.
Who's gonna pay that?
Right, and that's why you get
We'll
title
protect the buyer, even though the seller didn't disclose, and we'll pay it for the buyer because we
Right.
don't want them to lose their house.
Right.
But we're gonna go after that seller, or try to.
Yeah, absolutely.
So that's why you want title insurance, for the most basic reason.
Yes, and
Yeah.
it's a one-time charge. Typically, it's based on the value of the house, right? What percentage is that?
Yeah, and to, we get a simultaneous issue.
Yeah, and then
That's a
lender
big
gets, the
thing.
lender gets a
Um,
policy.
So yeah, it's actually, it's a reasonable discount. I mean, it starts at the base 165, and there's a charge between the difference between the loan amount and the owner. So it's actually pretty a lot more
Yeah.
reasonable. I think what
Mhm.
people see now, we have to disclose it at different rates, but it's for what you get, and the one-time charge, the amount of coverage, it is a great benefit, and it is a one-time.
And what's interesting is the lending, so, it says optional for the owners, but the lenders isn't optional, because the lenders, it's a business.
Yeah.
They want their title, but they want to make sure that they're gonna stay in first lien position as the lender. But who's gonna protect the owner
Yeah.
if something happens?
And you pay off that mortgage,
Yeah.
that coverage leaves with the lender. Or if you refinance, it's gonna be a new lender, so it stays with you, it is your personal, it is
Forever.
your policy for you, for the duration that you own the home.
Yeah.
So let's say a buyer is buying a property that already has title insurance. Do they still have to buy a new title insurance?
Yeah, because the seller policy was, the policy was in place and now the seller's selling it. It was theirs. So now
Sure.
the buyer needs a new one.
That's their.
Now there is some, we might have to go back to my rate manual, but I think that you can get, if you have, the seller can produce a policy, the one that's existing.
Yep.
Like you're an agent, you're working with the buyer, ask your listing agent, does the seller have their owner's policy? Great. Give it, if they allow you to give it to them, they can pull it forward, and I think we can do a discount on the price of the owners
Sure.
based on the reissue rate. I'm not sure what that rate is, but we can find out. But
I look at it too, like homeowners insurance.
Yeah.
I mean,
Yeah.
Yep.
if you look at it there's still probably some cover, if something happened, like say, you get a real estate sale and you got damage. Well, yeah, they're the insured.
the seller there's still coverage for the seller.
They still receive their benefit, but generally speaking, you wanna be the insured. You wanna have that binding
Fee
agreement
title
contract
interest.
together with it. So, yeah, it doesn't necessarily when the ownership stops, that policy was intended in binding agreement between them and the title insurance provider.
But
So-
as an underwriter, if the seller had coverage for the seller's policy, when they owned it, had this great policy, had a lot of coverage, and the buyer takes over, and we determined that a problem kind of existed over here, even though we would recognize that on that policy,
Sure.
and we would defend
Okay.
based on whatever that coverage was, even though there's a new policy out here.
Got it.
Yeah.
That makes sense.
Yeah.
So Tom, recently, did you guys get an award? What's going on with that?
Well, we did.
You did?
So First American is still the largest title insurance provider in the
Yes,
US.
we are.
So I think Minnesota, South Dakota.
My 3 states are South Dakota, North Dakota, and Minnesota.
Yeah, so she's being modest. She's actually kind of a big deal.
No, I'm not. I'm only good because of my agents, and that's the true story. But
She still runs those, and I think was at the top.
you are one of my top 10 agents,
Yeah.
but you are top 5.
Yeah, and so the
Yeah.
3-state areas. So
That's huge.
Yeah, they have. I can tell you, I started here 3 years ago in this role, and their business has not only been A+ because we do rate our agents, has taken off. In the last year or so, you can see that the hard work they do their numbers are going up.
Yeah.
So that's got to say something,
Mhm.
right? People are happy.
Yes. Yes.
So yeah, so they got an award for that. Top
So
5.
that's awesome. Congrats, Tom. Well, and Minnesota River Valley. Yes.
Yeah.
Tricia.
And Tricia.
Oh, yeah.
The whole team. The whole 9 yards.
It's all them. But
So, also, kind of a unique thing with you guys. Talk to us about the people that work here, Tom.
Oh, yeah. So Deborah, she was the founder.
Okay.
So yeah, we're a family-run business.
100%.
So Deborah is my mom. Deborah Scruggs. Her nickname is the Oracle. So yeah, she's been here for all 10,400 and some files. So yeah, you just go there. She has, I remember back in 2003, we did this, that, this, and this was this. And then she, pull up the title standards, ask that, this, and this. So she's And it's funny, as if you come to our office, she's the first person you meet.
Yes, she is.
Because she loves talking to people, loves being in the process. And sometimes they're like, "Oh, do you the kind of the secretary?" I'm like, "No, that's the
It's the head boss.
Yeah.
She loves it when the front door opens. She's like, oh my gosh, she's here.
Yeah. Want to say hi?
Well, and she remembers everybody's name,
She does.
which is just, I mean, every time I see her, whether it's here or someplace else, I mean, it's
She
incredible.
does.
She is awesome.
She does.
Yeah. Then you got myself. So Grant, that'd be her grandson, my son. He's with us. So he's 20. He's learning the ropes.
Yeah.
Very analytical thinker.
Yes.
Yeah.
Yeah.
But we're also a fair company, and he's also our janitor. So you don't come in and run the show. That's more of his
This
job.
is where you're going to start.
Yeah.
Works
So
well.
he takes care of but right now he kind of takes care of the post closing. Does all the indexing, the files upload, sends out the final policies to the lender and the owners and admin there. Jacob is our next senior one. His ability, he can read those legals, like those meets and bounds, like no receiver.
My least favorite thing. I can't do it.
33 years in the business, and I'll just turn a blind eye.
Yes.
Yeah, he can read that stuff like a book, and that is probably his most important skill set that we have here.
Sure.
At the company.
That's because you have a lot of that down here. You have a lot of
We
meets
do,
and bounds
yeah.
down here.
Yep.
We're country. Yeah,
Mhm.
for sure. Then he also takes care of the kind of the post close and get everything to the county for recording, filing the EC electronic certification,
Mhm.
real estate value. We have to report all the sales to the states. He takes care of that. Chris is here. He's kind of our intake. He touches the files initially, gathers all kind of the pertinent information, contact, commission, addresses, any unique circumstances. So we kind of gets the file open, and kind of, I guess, if at the end of the day he kind of builds a skeleton of the file.
Sure.
Everything we kind of need to kind of get it moving along. And Leah's been here now for about a year and a half.
Yeah.
She does a lot of the data input, like all the data information we put together, starts building files. She also does a lot of marketing. She's got a master's degree in marketing.
Yeah.
And she loves talking to people. And she's very delightful. So she does a lot of our networking groups, other type of reach out events or touch and base with the community. She does great with that.
Yeah. Good team.
Yeah, well-rounded. So that's us, and yeah, we're functional, and we all get along pretty well.
Yeah, even that's,
That's
and
important.
it's funny. I was born into this business too. I'm from the West Coast, so after I graduated college from Arizona, I went back home to Seattle. My mom owned her own escrow company because they have independent settlement companies there.
Okay.
But just do the escrow and call it escrow. My dad works for U.S. Bank, so it's once you're born into this industry.
You're committed.
I tried to leave. I think I worked for Banana Boat Sun Care for a while in Arizona, but it's like a sickness. It's just such a great honor to be a part of an industry that helps consumers with what they're doing, buying a home and fighting for the industry, whether it be FinCEN or affordability.
Right.
Right now, housing
Huge
affordability, it's really exciting. So it's a sense of gratification, at least when I was a closer too, after someone leaves after their first house, and you're just like, oh, wasn't that neat? It
one of the
means
best
a lot.
feelings.
It
Yeah,
is, right?
absolutely. And
It
just
is.
see the smile on their face. They're so proud and so happy.
I know.
Yeah, it's an awesome feeling. The last question I kind of have for you guys is, and I get this from some clients from time to time, abstract titles. Kind of a thing of the past.
Yeah.
I'm kind of salty about it. I loved it. I love the history, but why did we go away from it? What are we doing now?
I think just in my opinion, abstract title is great. It's a history of the land.
Yeah.
But kind of when we revert back to talking about an owner's policy, that is a binding contract between the owner and the First American. It is an insurable product.
Yeah. I mean, abstract, you can still get a policy. If people have an abstract, you can still get a policy. The abstract, I think, and I love the abstracts. It was when it changed is when the accounting, when the recorder offices were closing the gap.
Sure.
So now we don't have such a big gap now between stuff. Things are getting online faster.
Yeah.
And so we can bring it forward without having to do a 40-year search, which costs a lot of money for the consumer to do these 40-year searches, and people lose the abstract. And so abstracts just kind of went away.
Yeah.
They still exist in North Dakota. It's like gotta update the abstract. They still get title insurance,
Sure.
but you have to have an abstract updated, the new pages put in,
Yep.
and that's starting to go to the wayside too, but I know they're so neat, but
They are. The history of
It
the
is.
property that you bought all the way back
It
to,
is.
1800s.
and some people still have them. They don't.
Yeah.
You just don't have to give them forward. You don't have to give them anymore when you go do
Right.
a transaction, right?
Right.
So, thank God the recording offices we've got closer gaps, so we don't have to go back and do a 40-year search
Right.
on and
Right.
Yeah, because
On all the-
I mean, you would think technology, you'd be able to go online and look at the records.
Yeah.
Within the statutes, there's like the 4-year statute, 3-year statute. A lot of those records now, like I think I think they're back to 1985.
Okay.
That we go online.
Yeah.
So, a lot of times like that 4-year standard, 4-year search, there's a reason why we do a 4-year search, because the nice thing about real estate, not to say it's wrong, but time cures quite a bit of things just over time.
it does, yeah.
So it just kind of helps expedite the process. Otherwise, like sometimes you still have to go up to the courthouse.
Right.
I had the funny guy call it microfiche. It's microfilm.
My first thing was
Yeah,
microfiche when I
yeah. So
started.
we had to go in there, grab a roll, find the document,
Oh
look
my
it underneath
gosh.
the thing, and I don't even know what.
I'd pull the microfiche when I would get a contract to find out if the seller on my contract was the actual owner. So I had to go through and microfiche and make sure matching.
Time consuming.
Oh, it's like the Dewey Decimal System on steroids.
It is.
Trying to find what you're
Yeah.
looking for.
But
You
it's-
got this book, that book, full this, full, and then it's.
Yeah.
So, I mean, an abstract was really nice too, though, just for, and everything was laid out, everything was certified. You didn't have to manually go through, pull these index cards, grab the film, do
Right.
this, take a copy. So it's just kind of a natural progression.
But even now, if you get an abstract, there's still gonna be, it's so old enough that there's gonna be a gap that they're gonna have to go to the county because pages aren't being put in.
Right,
So,
right.
yeah,
Yeah.
but I mean, they're really neat. But
Yeah. A cool piece of history, but at
It
the
is.
same time, kind of irrelevant now. in
I know,
today's real
it
estate,
is,
so.
it is, yeah.
Okay, final last question. What is one piece of advice you would give to your clients or to our viewers? What do you think is the most important thing?
It's a big investment. Take your time, do your research, look into. I mean, they can always ask any question. Like when it comes to the title world or some year, like they said, they can look at the title commitment if they have things on the requirements. Feel free to ask questions. I think title insurance is great though. Like Tricia said, there's just some things that you don't see,
Right.
that's not presented or is unknown, or even just the human element. Great one-time investment for such a large coverage amount. But I think, what is it they say? Real estate is the greatest wealth investment, or way that American families generate wealth.
100%.
Why
without a
not
doubt.
insure it?
Yeah.
Why not?
Absolutely.
And just enjoy the process. It's
Yeah.
going to be stressful. John, you're a wonderful real estate agent. Pick
Thank
the
you.
right guy, because when you work with people, a lot of times you have a lot of trust that's automatically transferred. And if you get a guy like John,
Yeah,
took the time to
the
interview us.
realtor matters.
It
It
does.
does. And my advice is just, as a consumer, don't work with your realtor. Obviously, realtors are to guide you, but ask questions about your title insurance, what it is, and make sure you get a copy of it. Make sure you get to see the commitment of the policy that's going to be issued, and ask your realtor to go through it with you, just to make sure that there isn't anything on there that's going to end up on your policy that you don't know about. So if you're going to pay for something, you should know what you're paying for, right?
100%.
And there's a lot of moving parts, and you're leaning on all the experts to just do the job. But when it comes to this thing that you're paying for, understanding what's in there when the commitment is delivered is important.
So it's good. Hope there's exceptions.
Yeah,
Those are
then you feel good about
important.
paying. You feel good about buying the policy. I mean, no brainer. You should have title. You should have title insurance. I could talk about that all day. But part of the process, getting the title commitment's important,
Absolutely.
and reading it.
Awesome. Well, thank you guys both
Thank
so
you.
much for your time. It was I know I learned a lot. Hopefully the audience learned a lot too. So thank you so much, you
Yeah.
guys.
That's great. Thank you for having us.